Bank of Queensland anticipates increased risk next financial year. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's check out this article from Mortgage Business about the Bank of Queensland. So the group anticipates increasing risk in financial year 2024. The banking group has seen a dramatic drop in home lending growth, warning that the elevated costs of living, lagged impact and sustained higher interest rates. Okay, it's higher compared to 0.1, but in reality, it's just going back to normal, guys. Let's bring up the cash rate here. Let's bring it up. Okay, see that 4%? Sure, it's probably higher since, okay, we were around 2 to 3 for most of my post-uni life. Yeah, it's getting up there, but okay. So let's, actually, no, I finished uni a lot longer ago. I keep thinking the 80s are 20 years ago, guys. I'm screwed. I'm getting so old. What am I going to do? Oh, boy. Anyway, and a cause for concern in the financial year 24. ASX-listed lending group, Bank of Queensland Group, revealed its financial results for the year ended August 31st, 23, on the 11th of October, in which it revealed that its overall housing loan book contracted in the year. The group said the housing loan contraction of $682 million was due to prudent capital deployment and the prioritization of economic return over volume growth in a highly competitive market. Application volumes dropped to 41,900 over the year, down from 53,100 the year before. While looking at the group's retail lending brands, Bank of Queensland, Me and Virgin Money, home lending growth fell by $741 million, a stark contrast to the prior year when it grew by over $3.7 billion. Broker flows continue to increase, with BOQ revealing that the third-party channel originated 59% of its mortgages in financial year 23, up from 55% in 22. Overall, brokers have written 48% of the group's mortgage portfolio, up from 45%. While mortgage group growth has slowed, the group saw an increase in business lending. The business loan grew by $627 million over the year, which was attributed to a focus on key SME areas of healthcare, agriculture, and equipment finance, as well as owner-occupied commercial property lending. In total, the group's loan book growth dropped by 1%, while its business loan growth grew by 4% compared to 22. Despite the rising rate environment, the group revealed an improvement in the quality of its home loan portfolio in financial year 23, with an increase in conservative LVRs, loan-to-value ratio lending. Around 98% of customers have an LVR of 90% or less, while the flow of loans with a LVR of over 90% was only 1.5%. Furthermore, the financial year 23 flows from home loan customers with an LVR of greater than 80% reduced to 8.7%, down from 11% in 22. Well, that probably has something to do with property prices in Queensland going, what's the term? Batshit crazy, I think, is the best way to describe it. Approximately half of mortgages had a repayment buffer of 1 year or more. The results showed that 27% of the bank's housing portfolio is currently on a fixed-rate loan, with the fixed-rate maturity tower to peak in the first half of 24. It said it had an ongoing focus on proactively supporting customers transitioning from fixed to variable rate loans. Looking forward, the group said it anticipates increasing risk in 24, ending August 2024, due to the lagging impact of interest rates and the elevated cost of living. Bank of Queensland also acknowledged its 2 court enforceable undertakings, which it said it was embracing with a focus on building stronger foundations through financial and operational resilience and improved risk culture. The new Managing Director and Chief Executive of BOQ, Patrick Allaway, said the group is committed to its risk remediation programs with both the Australian Prudential Regulation Authority and the Australian Transaction Reports and Analysis Centre. We recognise that this has been a difficult year for our shareholders and take accountability for the operational risk failings that led to the 2 court enforceable undertakings, Mr. Allaway said. We have high conviction in our strategy and a clear roadmap in place to deliver a stronger, simpler, digitally enabled, low-cost bank with exceptional experience. We are committed to addressing our challenges heads-on, and our transformation is progressing at pace with key milestones achieved in 23. The strategy Mr. Alloway refers to was BOQ's aim to simplify the group, which said it was targeting cost productivity benefits of $200 million over 3 years. An example of the program was through the increased use of automation, with 45% of key processes automated in 23, with the group looking to reach over 80% across 24-26, along with a reduction of home loan origination costs by 50%. Looking ahead, BOQ Group stated that it anticipated that mortgage pricing will need to adjust at some point to provide returns above banks' cost per capita, and projected housing credit to grow by 3.5% in 24. The non-major lender group said that its 147 branches remains a key differentiator for Bank of Queensland, along with its 17,800 accredited brokers. According to the group, in financial year 23, it achieved a 2.82% market share for housing and a 1.4% market share for business, excluding the BOQ's financial brand. BOQ also forecast unemployment to rise to 4.5% by the end of 24, or financial year 24, with households continuing to benefit from the strong labour market despite consumer confidence being heavily impacted by the rise in the cost of living and higher interest rates. Financial year 23 results saw a 70% decrease in the group's statutory net profit after tax from 22 down to 124 million. That's huge. 70% decrease in NPAT. Okay, well, the reduction was previously flagged by BOQ when it said earlier this month its financial year 23 results would be impacted by 35 million after tax in restructuring costs, which included redundancy-related costs and 44 million in integration costs to do with the acquisition of Members Equity Bank Limited. So there we have it, everyone. Let's have a bit of a chat about this. So, honestly, this just sounds like a challenging time to be a shareholder for Bank of Queensland. I don't have any shares in Bank of Queensland. Let me know if you do, guys, and if you're happy with their performance. We'll have to see how they go. It doesn't look like they're at risk of all of their loans falling over or a significant number impacting them. But there you go. I mean, hey, maybe now's the time to look at them. I don't know. Let me know what you reckon, guys. As always, thanks for watching. Check out HeiseBim or Heiser Does. And if you're a fan of the channel and want to support us, you can on YouTube or Patreon. Use our referral links, buy our pocket squares, or call me if you need an architect. Take care. I'll see you next time. Bye for now.